Good morning, everybody. It is Thursday, February 20th, and we're going to start our prep today for the ES. Were you ready for the upside favorite day and the times that we were likely going to see those pullbacks for you to get in on? We laid those out yesterday. We'll review those today. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So when we start to look back at yesterday, we mentioned that because of the VIX expiration, 9 a.m. and 1 p.m. would be the critical times. And those would be when we would see that repositioning come in, which puts a little downside pressure into the market. And at 9 a.m., we saw the downside pressure come in until about 10, till B period. And then at 1 o'clock, we saw our final big pullback in the day before the big push at the end of the day. And those are the things that we look at and we monitor and we map throughout the day and among other things and strategies to really enhance our edge in the markets. Because if we can know when billions are going to come into the market and what direction that's going to push us, we can prepare and not get in too early and get ready for the next big leg. And congratulations to some of our students that did get in yesterday at 32 to 33 with a 1.5 to 2 point stop for a 30 point gain. So if you're still not making 5, 6, 7, 10 to 1 trades or higher, in this case 15 to 1, at least a percentage of the time to really skew the market and the moves in your favor, then don't forget to check out our courses that are upcoming in March as our students are crushing the market at the moment. So let's get into today. And we've gone over our levels in our short video, but a little more in depth here. We laid out last week that we knew today was going to see a large bid in the market, $5 billion if we stay between 61.46 and 61.76. So if we know that, pretty high odds that the market makers and systematics that are running algorithms in the market are aware of this as well. And this is what they prepare for, the same way that Walmart or Target or retail will prepare for Black Friday, is they know there's going to be a large influx of customers. If we can map this a week in advance, we can know what the agenda is going to be. And so today we are over our line in the sand at 61.20, which is moving up slightly from where we started our video this morning. And we have a large bid that's going to stay between 62.08 and 61.15 of at least 4 billion. It drops down to about 2 outside of those edges, but 4 to 5 billion is going to be purchased in this area, which gives the market makers and commercial side of the market a very nice bid to either move the market up, which today is really the last moving day potential of the week. As we mentioned last week was the better moving week. This week was going to be smaller and condensed. Today is really our last moving day before tomorrow when we have trillions in notional value that's going to get repositioned. So that's going to be very important to watch. And this is either going to be a bid to help move us up into this upper edge of 61.90, or even if we push down, it's going to give us support. Now, where that changes again is using our levels. So if we break our rotational low, we don't want to be looking long until we confirm we're holding the line in the sand or we reclaim it. And then on the upside, if we start to break out of our rotational, then we're looking for a trend move up to that 61.90 where we will see our commercials and our market makers begin to sell. But today now, instead of a sell that's going to push us very hard lower, we're going to see a sell into that $4 billion bid to stay more compact and sideways. And so our plan today is looking for rotational price action from 61.34 to 61.69 with a pivot at 61.50. And again, our line in the sand is always going to be moving. Right now, 61.20 3/4 is that level to the tick. So you can pay attention to that. And that's right around our lower pivot. And then our lower target is 61.10. On the upside, again, 61.82 to 90 are the upside targets, and that is where we will see our market makers begin selling because they are out of cash. They now just are full of product. Their shelves are stocked, and they can sell continually. And they have a bid to sell into today, whereas yesterday that would have helped push the market down. Today they have that support coming in. So those are the things we're going to watch today in terms of our catalysts and our insurance play. We don't really have any major catalysts today. Tomorrow we have consumer sentiment, so we'll watch for that closely. Otherwise, we don't have anything really standing out that traders are going to be overly concerned about. There's a couple Fed speakers, there's the 30-year auction. Again, those aren't going to be as big of movers as other catalysts, so we will monitor those as we always do. And if you are one of our subscribers, feel free to ask about that, and we can post updates as the day goes on. Otherwise, that's probably not going to be a play today. We have other catalysts coming a little bit tomorrow, and then more so next week as we go into NVIDIA earnings. So that's it, guys, for today. Be sure to control your risk. That's the number one thing we can control in these markets. And if you are interested in our courses, please check out our website as those are beginning in the next few weeks. Have a great day and stay safe trading out there.